So we were just about wondering if we should mix up our seats, just so you're all completely irritated and don't know who is who. But I think we just matched the slide above. So welcome, everybody. It's nice to see that there's still quite around, even at pretty much the end of this conference day, which seems to be interested in today's topic, money laundering and the effectiveness of regulations to prevent money laundering, to detect illicit activity on the blockchain. I think one of the, or for me, we've been discussing beforehand of this panel, that the surprising part is you're all here, which is really nice. There's still some people that survived most of this conference day, but the second surprising part is also that this panel is so late in the day. A few years ago, money laundering, illicit transactions, and blockchain were like one of the hot topics, which were usually at the prime time of a conference. And I think the positive side of having this panel rather late in the afternoon is that somehow it's slowly went into the industry, but also into the broader environment, that blockchain has so many more use cases than just illicit transactions and etc. But nevertheless, the regulator still has to learn that in intensity. And I'm happy and really looking forward to the discussion with two rock stars here. On the one hand, we have Salih Altuntas. He's a director of investigations at Chainalysis. Before that, he worked at the Bundeskriminalamt, the German Federal Investigations Officer, so has a long time experience when it comes to blockchain forensic research, trying to catch bad actors on the blockchain. Lars did his doctor's thesis here in the Technical University of Munich, afterwards, and specialized on money laundering and the blockchain. Importantly, afterwards he worked at a regtech fintech in Berlin and has recently become a partner in a boutique law firm, Pike Partners, here in Munich. And then myself, I'm a long-seasoned compliance expert. I've been heading compliance functions within crypto firms for roughly 5 years by now. And before that, I worked in the compliance function in TradFi, so have quite a good feeling of what the regulator expects, how to deal with the regulator. And yeah, with that, I would love to just jump into the topic. And Salih, from your point of view of the time back at BKA, but also from recent numbers, can you present some figures and a bit of background on how illicit activity has evolved or changed on the blockchain in the last few years, weeks, or months?
All right, I have to talk into this. All right, so the numbers and figures we go by are stated in our yearly crime report that we put out every year. And right now, if you look back at the previous year, 2024, we can see around 40 billion with a B US dollar worth of cryptocurrencies being received by illicit wallets. We estimate the actual figure of being a bit higher. The reason is that with ongoing analysis and research, we sometimes are able to retroactively see clusters that received illicit funds in the past. So we tend to underestimate the crime figures. So our current estimate is that for the last year, it's around 50 billion US dollars worth of transactions. So to put this into context, this is about 0.16% of all the crypto volume we see on chain. But to give a bit more context, the 50 billion number is only the net volume that we see. So, for example, if we see a transaction, let's say going to a darknet market wallet that hops first 3 times and then goes to the darknet market, we only count the volume 1 time. So this is only the net numbers. But if you look at it as a percentage, it's not like that high. We're not talking about like 10, 20, 30%. It's like a very small number. And when it comes to the crime types, we see that the classical cyber crime categories like ransomware and darknet market exposure are actually going down. And so the everyday crime types like scams, stolen funds, and in the last few years, especially sanctioned transactions, sanctioned entities or jurisdictions. These are the categories that are currently like on the rise, like like nothing seen before. So that's like a very quick rundown on what we see in the crime space right now.
Thanks so much. And then a question to you, Lars. In your point of view, what is the largest misconception that regulators, but also policymakers might have when it comes to illicit transactions? And I am on purpose using the term illicit transactions because money laundering is just so limiting on the blockchain.
Yeah, so first of all, one point to add on, the numbers that you've just mentioned and the trends that you've just mentioned, they actually show in the SARS as well. So I'm working with clients in the crypto space, and the numbers that you've just mentioned, the trends that the scams are increasing, and that is showing in the SARS that we file as well. The biggest misconception is, first of all, that regulators that I've talked to say, well, everything on the blockchain is illicit. The blockchain itself is illicit. That must be something to hide something. And I've just recently talked to a regulator that said, well, it's all about the anonymity in these transactions. And then it's trying to educate the regulator that this is not really anonymous, it's pseudonymous. Then does this really mean that it's illicit activity? Of course not. So trying to educate the regulator and also the policymaker about the numbers that you've just mentioned is probably the biggest misconception in the regulators' minds that we need to work on. I think we need to show them positive use cases, not illicit, but licit use cases, so legal use cases, and that's probably the biggest misconception that they have.
Thank you for that. I would fully underscore that from my experience as well. Yeah, and Salih, from your investigations that you've seen recently, what are the most common laundering schemes or illicit transactions that you see? Are they more on DeFi, more in the regulated space, or where would you currently see the largest risks?
Yeah, where should I begin? So we see methodologies changing all the time. Right now, what we see a lot are DeFi protocols, very easy to use. Like the general public, also the suspects get more technical, more sophisticated, get to know how crypto actually works. And for that reason, they also tend to explore different options of money laundering, basically. So trying out new protocols, maybe doing cross-chain. We see, especially with hacking groups, with funds being stolen from larger on-chain entities, that they really like to move funds from chain to chain. We call it chain hopping. So you basically take a bridge or an instant exchange and you change the asset or the blockchain, and you don't do it one time, you do it 3, 4, 5 times. Every time you do it, you lose a little bit of money, of course, because of fees and stuff. But in the end, this is a very good way to obfuscate your funds if the investigators you want to shake off, if they don't have the necessary knowledge, tools, and competencies to follow the funds, basically. And this also helps them to obfuscate for automated methods. For example, if I have stolen funds from exchange A, and these funds are like attributed or labeled on the blockchain, I would run them through a mixer, but then it has the label mixer, right? But if I change the blockchain 2 or 3 or 5 times, the money comes out of a bridge or out of an instant exchange, and then they are fairly clean if you cannot follow the trail, basically. So this is a very commonly used method. Mixers were always there, will always be there, and privacy coins, of course, are also always a problem. I don't really see them growing too much because I don't know if anybody uses privacy coins. If you're not tech savvy, it's not really easy to use, especially if you want to turn the money to, I don't know, to a Lamborghini. It's easier to do this with other cryptocurrencies rather than with stuff that is like more on the taboo side. Yeah.
Maybe also on the point that you've mentioned sorry. The what did you mention before privacy coins? Yeah, cross-chain bridging, exactly. We see that as well, and from a mixing perspective in the regulated space, we see that there are not that much mixing activities of our own customers. So the customers that are in the regulated entity, they don't use mixers that often. They usually do that probably from self-hosted wallets, not so much from a regulated entity's perspective.
Yeah, definitely something that I've also seen. It's also when it comes to regulations and the expectations of the regulators. I know intense discussions a few years ago with BaFin when cross-chain bridges were top of their mind, and they were basically chasing crypto firms saying, you got to do something against it. At least you got to include it in your transaction monitoring system. And we were like, okay, we will try to do so. How? We don't care. Just do it. Include it. and that's where things really start getting spicy, because we have an expectation from a regulator. We have the willingness of a regulated institution to detect, prevent illicit transactions, but then comes the challenge on how to really implement that. Then comes the crypto community, and especially if you're working in larger regulated firms, there's really deep tech knowledgeable people where you can have super interesting discussions of very legit reasons to use privacy coins, of very legit reasons to use bridges, etc. And not everything not all funds that are sent via a bridge are for unnecessary reasons or for illicit reasons. So yeah, happy to have your thoughts.
Yeah, so just a thought from a BaFin paper that was published 2 years ago. There were regulated institutions, credit institutions, not crypto institutions, but credit institutions that reported every single person that received funds from a crypto institution. So they said every crypto deposit that is made into a user's account is worthy of reporting a suspicious activity report, because crypto is suspicious. And BaFin had to make a statement in writing that said this is not grounds for filing a suspicious activity report. So that's where we basically came from. And this is where this regulatory expectation that you just mentioned, you've got to do something about it. We were first at the point, this is blockchain, this is crypto, you got to do something about it. And then people started over-reporting, and then they said, well, this is not what we wanted. And now we're at the same point, probably again, right? Probably crypto institutions, when they hear these thoughts, say, well, then I'm going to report everyone that's using a bridge, everyone that's using a mixer. But that's not it, right? That's not gonna yield any results.
Yeah, exactly. I remember having worked in the Anti-Financial Crimes Alliance blockchain expert group, and the Anti-Financial Crimes Alliance, for those who are not aware, they're a public-private partnership where my recent employer always was also a member, and then I helped to develop a blockchain or crypto white paper that was published on the internal part of the Financial Intelligence Unit in Germany, and the first draft of that paper that I had received was basically an instruction for a TradFi MLRO how to detect receives from crypto exchanges in order to do those filings. Because every single receive that might come from a blockchain company is illicit. And I was like, you're not honest about that. You know that people have been investing in Bitcoin, have been investing in other cryptocurrencies. They have made wins or gains through that, etc. And we're looking for illicit activity and not for people who just wanted to invest, who were at the right timing and really gained a lot of money by the rising Bitcoin courses, etc. So that is really, it's still a challenge to educate the regulator, but also to educate competitors as well. I would like to take a dive into the travel rule, because that went into force at the beginning of 2025. And Salih, do you know any examples where travel rule data or data that was transmitted due to travel rule really helped to uncover a case for really bad actors?
Short answer, no. Long answer, that doesn't necessarily have to mean that travel rule doesn't make sense. But the cases we work on, the crime has happened already, and we just try to figure out either who is the suspect, so where are the cash out points, where we can maybe retrieve data, or what happened with the stolen funds, that we maybe can freeze them, bring it back to the victim, or if we know the suspect, sometimes also additional information on the crime, are there other suspects, are there other victims, and so on. So the travel rule doesn't really apply to us, because when we see money going to an exchange, we can just ask, and the single most important regulation that we are using is just KYC, like plain old KYC. If the exchange has good KYC, it is just make or break for the investigation. If it doesn't have it, yeah, the investigation is severely slowed down, I would say, or even made impossible. And we see I would say, vibrant community inside of like specific suspects scenes, where people are exchanging information on where can I cash out, where are the KYC rules very loose, I would say, which countries are the best, who doesn't cooperate with my local agencies, for example. And people are constantly talking about this. So for, I would say, sophisticated actors, they have a vibrant community where they exchange like the best cash out points with non-KYC. So I would say travel rule might help sometimes, but me personally, I would say KYC is the make or break.
Thanks. And Lars, what experiences have you made with implementing the travel rule?
Well, travel rule for the institution itself in sending transactions is KYC, right? I can only send information that I have on my customers, so I can only send if I've KYC'd them properly. And I agree, KYC, I know that I've had a discussion last year or 2 years ago here at the same conference, so not in this building, but at the TUM Blockchain Conference. And I had a vibrant discussion with an audience member that KYC doesn't make sense, we should not KYC anyone, this is anarchy, and we don't have to do that, it's our freedom. Well, if you want to be a regulated actor, you have to do KYC. There's nothing you can do, and it makes sense to a certain extent. It makes sense to do investigations, and as you said, you can't do investigations if you don't have the data. But travel rule is implementing basically an obligation to report certain data for transactions that work like cash transactions, and for cash you don't do it as well. Right? For cash, you don't hand over a paper that says where the money came from and where it's been. But generally speaking, if the money comes from a foreign wallet, or from a wallet that's from a foreign country, then maybe that CASP or VASP is not subject to a travel rule obligation. Then there's no data. And what you do if you have no data? You can't screen no data, so that doesn't really help. And then do you block that transaction because it doesn't have information? Well, probably not. Why? Why should you do that? So does that really help? From my experience, I haven't had a case where travel rule data actually helped. What actually helped is blockchain analysis. That helps. That helps uncover clusters in a retrospective time frame, because there's two things for money laundering, for AML, that we need to look at. One is trying to prevent something, and then trying to report something that's already happened. And what most of the time happens in traditional banks is they don't really see it as it happens, they retrospectively report it. And the same goes here. And for that, travel rule data doesn't really help. For that, blockchain analysis helps.
Agreed.
Yes, happy. I'll hand you the microphone because the camera needs it.
Thank you. So, yeah, first question, two questions actually. What you just mentioned, fully agree. So, yeah, the microphone doesn't work anyways. But my voice is good enough. So, first question is about, like we had probably heard 100 times about the Bybit hack. There have been money laundered through European entities with travel rule in place this year through regulated custodians in Europe already. Of course, North Koreans were behind it, and it didn't help. So what's your take on like the effectiveness of the current European policies, also not just mentioning traveler, but in general, touching KYC. And now coming to the second part, with AI now being so performant that you can, in a couple days, have a perfect model to show the ID, show all the reflection on the ID, and basically trick very basic KYC providers that are active in the European Union. Where do you see this going in like 3 years or 2 years even? Thank you.
And I already, I was thinking about the second question. What do you do with AI in terms of KYC? Well, the regulation, the AML regulation, at least in Germany and in Europe in the future, is very clear. There are certain things that you can do, and you can only do the ID verification types that's on the list. And one of them is currently video ident. We'll see where that goes in the future. It's up for grabs. But currently that's the case. And I agree, there have been, even 3-4 years ago, there have been cases where you can easily trick those. And it's even easier to get a passport currently in certain areas of Berlin, and then use. Yeah, that works, right? That actually happens, and then you get a passport or even like a foreign residence permit title where you can identify online with, and that works. Is video ident a risk? Probably, but it's market standard, and it's market standard, and it's better than in many other European countries, by the way, where we do selfie ident without any AI detection and without any human interaction. So where do I see this going? What I see currently in the European Union is a strict rule-based approach, and that somehow scares me. So I don't know if video ident will be possible in the future, but the EU is pushing for the EU digital identity wallet, and they are pushing for that to be implemented by 2026, and they are pushing for that to be the standard in basically identifying online. That's what I'm seeing, but again, that doesn't really solve the problem if you've stolen ID or if you have an ID without having legitimate documents in the first place. Then this opens the door for just using that ID over and over again. But yeah, there's not really a real solution. The only thing that you can do is retrospectively use AI against the criminals that use AI to detect. But with online scams, with online AI use of criminals, that's what you can do.
One question about the upcoming institution in Frankfurt. I think it's called AMLA. Can you say something about what changes this will bring to the whole investigatory scene? Do you think it will be promising or?
Well, I think one of the benefits of AMLA is that their mission will be to create a level playing field of supervision throughout the European AML regime. Because right now, depending on which European country you're looking at, there's not just on the identification basis, but also on the ZAR filing requirements, etc. There are differences between the individual EU countries. But also looking at it realistically, AMLA will first of all supervise only the larger institutions, so smaller institutions which have been used by criminals for ages because they've always been easier to sneak through. They will fall through the first net of AMLA, and it will take some time until the AMLA supervision and regulation has really ended up there, down there in the smaller institutions. So I think it's kind of like mixed feelings for larger institutions. It's surely positive that there will be same standards everywhere. Because having worked in international firms the last couple of years, I've always experienced this discussion on, oh wow, in Germany you have the bar set up this high. If we go to Spain, it's much lower. If we go to Romania, it's even lower. Why don't we go to those countries? And of course, there is a different reputation within the EU countries, like looking at Malta, for example. It's easier to get a MiCAR license in Malta than it is in Germany. But what's the license worth in the long term? And same should count for supervision as well.
Maybe just one thing to add on. The president of AMLA, Bruna Szego, has publicly said that crypto is an issue that she sees, and that she will, at least this is the rumor in the industry, that there will be of the 40 directly regulated institutions, not regulated, directly supervised institutions by AMLA, that there are going to be about 5 to 10 crypto on there. So that's what they're looking at the moment, and that of course is probably scary for the industry, depending on how strong AMLA will push and how strong AMLA will supervise those. That might create some problems, so we'll see where that goes, but it's not yet decided if it's 40, might be even more, might be a different list. So there's some uncertainty in the industry there.
What do you think about a requirement for self-custodial consumer wallets to do KYC in the EU? Potentially in the future, is that realistic? Maybe if payments are involved? Yeah.
I mean, we talked about this a bit earlier. I don't really think it makes a lot of sense. And that's basically the short answer. I think if it comes, it will probably hinder adoption a lot in jurisdictions that really take that approach. And yeah, stuff will just shift around, I think. It's just a balloon effect, right? If you push on one area, it will balloon out to other areas. I don't have a crystal ball. I would just say if it happens, it would have severe consequences, but I don't really think that it will prevent a lot of crime. Just my gut feeling.
We already see today, like in the German AML Act, there's already paragraph 15a on transactions that involve self-hosted wallets, and there's enhanced due diligence measures that a CASP needs to apply, or a VASP needs to apply. So we already see a push in that direction, at least enhanced due diligence. But for that change to be made, you would then have to, I don't know, how do you KYC for self-custodial wallets? Like that's also the question, like how do you enforce that really? You would have to make someone an obliged entity. I don't know how that would work. Yeah. Yeah, that would work, but then again, that would require a change at least on an EU level. Because then the AML regulation that's coming in on EU level needs to be changed. It's not in there, right? So if it's not in there, then there's to change an EU regulation takes time. That's the good thing of bureaucracy here. So it takes time. So to make that change, that will take time. It's not in there for 2027. So I don't really expect any change before 2029, I would say, but I don't know. That's just looking through the crystal ball. That's my personal opinion, but that's nothing that you should cite or trust on.
And also just maybe one quick comment. If I look back at the suspect we worked on, if they would need to KYC for a simple like ledger or any other web wallet or app or whatever, they just wouldn't use it. They would try to see another way or find another way. So I don't really think, and this goes for even the unsophisticated suspects, because if we had cases, for example, where actors were trying to cash out at a crypto ATM, and they weren't aware that they nowadays also require ID scans. So they went to the crypto ATM, wanted to pull out money, and then just appeared with a message where they needed to put their ID in, and they just drove home, right? So they weren't dumb enough to just present their ID. So I think they would just not use it. Yeah.
Thank you. And by the way, it's really great to have such an engaging audience. So if anybody further has questions, please always do feel free to interrupt. I think this also kind of like flows into the initial question on AI, identification, etc. Because if we look at the 6 EU AML regime, which is now coming up in 2027, they started working on that several years ago. And several years ago, AI was not a topic. And by the time that went through the legislation process and it was decided, AI still wasn't a topic. And in the last 2 years, AI has evolved so significantly, and regulation just doesn't take pace with the evolvement. And also an observation that I've made since I've been working as a crypto compliance professional is that usually the regulators, but also traditional finance, they try to apply their rules for crypto. And sometimes it's adequate, but most of the times it just doesn't really fit.
Same for ZAR filing. If you right, so you can easily use AI, or you can easily not in terms of like tomorrow, but you could build a model for AI and transaction monitoring, use it, apply it, and there have actually been use cases that I've seen that work like with 98% accuracy that the normal scenario-based models work like, and they're even better because they create 10% more alerts, right? So that's a positive use case, but then try to convince a regulator on using AI, and try them, test them on whether you can actually do that without human interaction. Like it would be possible to have transaction monitoring and then actually to file a ZAR if the case is very clear without human interaction. That's not possible in Germany at the moment. That's not possible.
Follow-up question to this. You mentioned that they are slow on the regulation part, and I fully agree. But then there is also a bit of mismatch because EU AI Act is like worldwide standard and really fast in the whole process. So it covers a lot of things. Of course, nothing with money laundering, but it's like on like top notch to the point, and it caught this AI wave. But why didn't it catch up on like the money laundering or financial side?
So yeah, what we see is there is a weapons race when it comes to AI, because suspects are free to use it, and government agencies have this thing called AI Act in front of them, and we are talking to a lot of agencies, law enforcement agencies especially, which are afraid of the AI Act, because if a application is involved in decision making when it comes to law enforcement, it is automatically a high risk type of AI application. Which means that if a tool vendor like we are, if we implement AI in one type of our tools where maybe stuff gets sorted out or automated or prioritized for the, in our view, to make the hard work easier and to maybe pick out the really severe cases, the law enforcement agency would have a problem because they are obliged to check if the application they use is compliant with the AI Act. So we had talks with agencies where they said, please don't put AI in your tools because we cannot use them. And this is a problem because the suspects can use it, and they do use it. And I see huge opportunity with AI to help the enforcement problem. I mean, I agree that there's a problem with crypto, but it is just an enforcement problem. Because we have so many cases that are not being worked on because of a huge bottleneck. I talk to law enforcement officers every day. We have a few of them in Germany. They're really, really good, but they need to work through very little cases, but because of the law, they have to work through them, and they don't have time to focus on the big fish. And that's a huge problem. AI would help that, but there's a huge problem because they are allowed to use it, but it is very difficult, problematic, bureaucratic for them to use it.
Very, very good point. There's actually a case that I've received a couple of weeks ago from a law enforcement agency on a case on a ZAR that the institution that I've worked with has filed 2022 for illegal gambling, and it's been closed now. So they've looked at it now, 3 years afterwards. Yeah, that's good. I know, but that's the situation that we're looking at. Like we're filing ZARs for illegal gambling, and we're filing these little transactions all over the place. And then there's an enforcement bottleneck, and the real cases don't get looked at. So that's an issue.
Now we've been talking issues for quite a while, and I would like to end this round with something a bit more positively and forward-looking too. If there was one wish or one change you could say, be it technically, be it on the regulatory basis or wherever, that would really improve the way illicit transactions in the blockchain ecosystem can be prevented or lowered or recognized earlier, what would that be? And I'm happy to start with that. as the woman here in the round. And my suggestion would really be to give more room for investigations, because being a money laundering reporting officer always comes with a personal liability in a regulated institution, and you have very strict ZAR filing timelines, etc. And auditors, regulators, they chase you, they threaten you with personal liability if you don't file a ZAR quickly enough, because like looking at timestamps is a very simple thing to do, and then saying a ZAR has to be filed immediately, don't look left, don't look right, don't look up and down, and don't look backwards on the blockchain, just fire out that ZAR. And the result is we fire out a ZAR with little content where law enforcement cannot really do anything. The alternative is digging deeper into the case, really identifying those illicit actors, but then filing the ZAR too late in the eye of the regulator. And I would really wish that there would be more understanding on blockchain transactions, blockchain analytics, that they are not as simple as looking at bank transactions where you can just look left and right, bank A to bank B, and that was it, because the blockchain system is just so much broader, and that there would just be enough time to investigate and not be chased by some deadlines which come from a TradFi world, but which don't really fit to the blockchain ecosystem.
So my initial thought was let's try to use AI, but my actual thought is why not use information sharing? That's one thing that will come up under the EU AML regulation. That's Article 75, if you haven't heard of it, that allows information sharing between institutions on risks associated with a certain customer, and banks are not doing that at the moment. They will do that in the future, and hopefully that will be allowed for crypto institutions as well, right? So that would make a difference to do collaborations of CASPs, maybe also funded by, but that's a hope that will never happen, funded by the regulator or funded by the state, because that's, again, cost added to a CASP, that will then use the data together in this partnership to identify transactions and clusters even better, right? So basically what you do in a more intense way, and with even more data and with even better results. But that's a wish that probably will take some time to realize.
Yeah, I would tackle the enforcement problem. So give the money laundering investigations in law enforcement more teeth. And one way could be to maybe lower the predicate threshold that we have in our criminal law, which hinders a lot of law enforcement investigations because they need to prove the predicate offense, and this takes a lot of evidence and time, and also separates the money laundering investigators from other fields they could look into. And if I may, I would also say that we could think about, I mean, this is a larger discussion, but I would like that we go after the money and try to seize the money, the criminal money first, and try to give the asset recovery offices in our country a bit more teeth, a bit more aggressiveness. And this could be achieved by if we have a very little policy change where seized amounts don't go to the general treasury of a state, but maybe 5% or 10% go to the law enforcement body that seized the money. And by this, we could change a bit of the policy internally and maybe put more resources into the financial investigations, give it more teeth, work on the enforcement problem, and maybe have more crypto investigators that help the ecosystem to stay clean.
Thank you so much for sharing your thoughts here in the panel. Thank you so much to the audience for staying. If there's any further questions, we're happy to take them. Otherwise, I think we can wrap up.